Why does it take so long to get a loan from a bank? What is going on, YouTube? It's Mentorship Monday. Thank you for watching. My name is Matt. My company is the DeRosa Group, and this series is called Mentorship Monday. So the way it goes down is you guys email your questions to helpme@derosagroup.com. That's helpme@derosagroup.com, and I'll answer your questions right here on the YouTube page for you and everybody else to learn from. So today's question comes from, well, it just says your initial. Oh, Eddie, there it is. Okay. Hey, Eddie. And I believe Eddie's down in Austin. Eddie's asking a lot about FHA loans and how often you can do them. There's a lot of other videos on the YouTube channel and through Mentorship Monday about FHA loans, no money down, how often you can do it, everything like that. Bottom line, Eddie, is you can do them about once a year, give or take, depending on the mortgage company. But you're going to run into a issue where you're going to start having these loans on your credit report. And so every time the bank goes to pull your credit, you're going to see all these mortgages. So you're not going to run into an issue of, the bank saying, okay, you can only have so many, because the number is 10, by the way, is the number of mortgages you can have in your own personal name. But I know no one that has that many mortgages in their own name, because what happens is they start to pull down your credit eventually. So that's why a lot of people transfer over to LLCs, because the LLC doesn't, if they run your credit and your mortgage is on an LLC, they don't see it when they run your credit. Even though you have to personally guarantee it, it doesn't show up on your personal credit report. But Eddie's question is about really how many mortgages you can have in that. So search the YouTube channel for that kind of thing. But Eddie also asked a really good question at the end here. And he says, last question, why does the approval process take so long? Good question. So let's talk about that, because Eddie asked that. Other stuff we've already talked about on YouTube here, but let's talk about why the approval process takes so long. So when you're looking at a small FHA mortgage that might be for a home you're going to live in or something like that, which is what Eddie's got here. That's what you got to do for an FHA mortgage. You got to live in the property. There is a lot of regulation through things like Dodd-Frank. You might have heard of that, and just FINRA and other mortgage regulation entities. I don't think FINRA regulates mortgages, actually, so maybe I'm misspeaking on that one. But I know Dodd-Frank is a law that got passed around the way mortgages get issued, and just it's very regulatory, the space of issuing home mortgages, because of the housing crisis from before, and just because there's a lot of people that need to get kept in line that are in that type of business. So there's a lot of regulation, a lot of hoops you got to jump through when you're a mortgage banker to give someone a loan for a mortgage. That's number one. And so just regulations on their side, so they can't move quickly because of that, number one. Number two, these banks are typically selling the mortgage. So what that means is you might be getting a loan from Wells Fargo, but what they're going to do is, as soon as they close that loan, they're going to go and take that loan and bundle it up with a bunch of other mortgages and then sell them. And it's going to be backed by Fannie Mae, Freddie Mac. Fannie Mae, Freddie Mac might even buy those loans, or other banks like PNC Bank might buy that pool of mortgages, or just a private investor might buy those pools of mortgages. So because they're being packaged and sold, the bank has to be very careful on how it gets put together. They can't just rush through the process. They have to make sure that all the I's get dotted and T's get crossed. And because they do all that, and they dot all their I's and cross all their T's and go through all your tax returns and make sure that your financial house is in order, because they do all that, it arguably increases the value of that loan to someone who's sitting behind them that's going to buy it. Because if they were to sell the loan to somebody and they'd say, well, we kind of know Eddie, we don't know him very well, but we didn't really look at his financials, but we just gave him a loan anyway, right? That loan wouldn't be worth very much, because whoever's buying that loan isn't very sure if Eddie's going to pay his mortgage or not, right? But if they say, listen, we underwrote his financials, we went through all these tax returns, we went through all of his bank statements, we did a full audit, and it was like a multi-tier audit, meaning multiple departments of people reviewed the financials, and all those people all gave it a thumbs up, then that arguably increases the value of the loan, right? If you think of it from a regulatory very bureaucratic process, that does increase the value of the loan, and arguably increases the I keep saying arguably because it's not really true, but they think it is. It increases the probability that Eddie or somebody else is going to make their monthly payments and makes the mortgage healthy, right? All these things are maybe not 100% true, but it does increase the value of the mortgage for them when they go resell it. So for regulation purposes and for all the underwriting they have to do, those two things take a long time. Like, it has to go through all these departments at the bank. On top of all that, they do have real work that they have to do. Like they have to go and do an appraisal on the property, and yes, it goes through a lot of deaths for people to sign. So bottom line, Eddie, that's just why it could take 60 to 90 days for you to get a residential mortgage or more. And I'm on a deal right now where it's been over 6 months to get a mortgage from a small community bank, because they're just taking their own sweet time to get through it, and I think that they're backlogged and yada yada yada. That is one of the reasons why raising private money for your deals, like by using the technology in my book, I always point the wrong way, by using the technology in my book, Raising Private Capital, is something to consider, because when you're working with a private investor, they're not selling the mortgage to somebody else. They're not regulated by Dodd-Frank or other regulatory issues, and there's not multiple levels of underwriting that the mortgage has to go through. I've closed deals in days with private money. It doesn't have to take 60 to 90 days. That's why private money is very important, which is why you guys should all check out my book, Raising Private Capital, because it tells you how to find that capital in your own network, including you, Eddie. And there's nothing wrong with private mortgages, with Fannie Mae, Freddie Mac backed mortgages and FHA stuff and bank loan stuffs. We do bank loans all the time on our properties, but you should also have some private money in your back pocket too. So Eddie, you're awesome. Great question, and hopefully a good answer too for you guys. So remember, help me at DeRosaGroup.com is where you guys want to send your questions. And don't forget to check out our website, DeRosaGroup.com. And don't forget to subscribe to this channel. If you're not subscribing to this channel, you don't hear about all the cool stuff that we're up to. And you don't get to watch all the videos, and you're not going to get updates of that kind of stuff. So subscribe to the channel so you can be in the family and in the loop of stuff the DeRosa Group's up to. So thank you, Eddie. Thank you guys for watching. I appreciate you. Have a great and profitable week.